Hello and welcome back for another edition of London Direct. What's going on with equities at the moment? The FTSE recently hit an all-time high, which was 15 years in the making. I've been to ETX Capital to discuss the London index. So David, we've seen all-time highs for the FTSE. What's the reason for this?
Well, I think there's sort of six reasons why the FTSE has hit all-time highs, and I think the first one that we've got to look at is global economic recovery, especially within the States. I think the key indications out there are the labour market improving. We're seeing an average of 250,000 jobs per month being created, and we have an unemployment rate of 5.8%. A good labour market or a strong labour market means a strong economy. So that's the first reason. The second is the vast money printing programme of central banks, so the Fed, the Bank of Japan, and following suit the European Central Bank. While there is a huge amount of cheap money sloshing around the system, it spurs economic activity within certain economies, especially the US and the UK. The third one is the tensions easing in the Eurozone, following Eurozone finance ministers giving Greece a 4-month extension to the 240 billion bailout. This has eased markets. One of the things they don't like is uncertainty, and this was causing uncertainty in the markets. Now they've been given the bailout extension. Hopefully they will be able to pay out the debts, and the market's taken that well. So the next reason is George Osborne's economic plan as well. We are seeing the number of people in work within the UK increase. So again, going back, a strong labour market means a strong economy. And lastly, it's also the Fed keeping interest rates low. I mentioned this to you before, Peter, that because interest rates are so low, bonds aren't yielding anything at the moment. So the only real place for pension funds, investment banks and hedge funds to put their money is the stock market. And this is another reason why we're seeing the FTSE push on to all-time highs. And I think lastly as well is that dividend yields on FTSE companies are in excess of 3%. And I think what this does, it attracts long-term investment into the stocks. So if people keep buying the stocks, they go up in value, pushes the FTSE up.
Yeah, this is interesting, the point about the divvy on FTSE stocks. You say it's greater than their US peers, but
yep.
We've really seen the FTSE lag the S&P, so that doesn't really seem to match up somehow. Well,
I think the problem here is that the weighting of the FTSE with resource stocks. We're heavily weighted with miners and other resource companies, and because of the collapse in commodity prices that we've seen over the last 7 months, this is one of the things that has held the FTSE back. As oil prices, maybe continue to rise that we've seen recently, inflation will rise maybe off the back of it. We may see a further, increase in the FTSE, but you are right, absolutely. Resource stocks are holding it back.
I often ask the same question, and that's what's changed, because low yields on government bonds, we've also the commodity prices have been suppressed for some time now. These aren't new things that suddenly reversed. So why now? Why is the FTSE now suddenly hitting an all-time high?
Well, I think the reasons that I mentioned earlier. Cheap money sloshing around the system. Greece negotiating a 4-month extension on their bailout agreement. Interest rates being kept at the level they are by the Federal Reserve and also by the Bank of England. These are the factors that are causing the market to push on to new time highs.
Yeah, so what happens when the Fed does raise rates? Because that's imminent. It's going to happen in the next 6 months or so.
Absolutely, and I think that's a very good question. Once the Federal Reserve does raise interest rates, we are going to see a drop-off in the stock markets, in the value of the stock markets. It's going to become more expensive to import and export from the countries that are raising the rates, and therefore it's going to hurt economic activity.
Yeah, so where do we go from here? I know some people will be optimistic, saying 7,500 is a realistic level for the FTSE. What's your take for it?
Well, look, people have called 7,500, people have called 8,000. Maybe it is a little bit advantageous, but I think there are 3 scenarios moving forward that are favourable for the FTSE 100. The first is that there is, the FTSE is cheaper than leading pan-European and US equity benchmarks. I mean, it's trading on a forward multiple of 14.6 times earnings versus the S&P, which is 16. So I think that's one of the major factors. Secondly, it's emerging market growth. 30% of the FTSE 100 revenue comes from emerging markets. People like SAB Miller, people like the miners, people like British American Tobacco. So as we continue to see growth in the emerging markets, this is going to be good for the stocks within the FTSE 100, and I think that will also help it push on. And lastly, London companies offer a 3.9% dividend, which is almost twice as much as US stocks. Now, this is going to encourage long-term investment into stocks within the FTSE 100, more money going into the companies. Hopefully the share prices will rise and push the FTSE up with it.
So essentially, to finish off in the short term, you're still seeing more upside?
I do for the next 6 months, but when the US starts raising their interest rates, we are going to see a potential pullback.
Well, thanks to David for his insights. Stay tuned to Dukes Copy TV for more interviews and analysis, but from London, goodbye for now.